want to talk about two things today. Markets is still kind of quiet, but we are seeing the premiums jump for both gold and silver from major wholesalers. Demand has picked up significantly since the months of June and July, and as we head into what is ordinarily the best appreciation part of the year, September, October, November, we're pretty optimistic we're going to get an upward move. But the two things I want to talk about today very quickly. Number one is we've had 7 emails about Jim Sinclair's prediction of $174,000 per ounce of gold that he was interviewed this past weekend. I did not see the interview. I've heard about it and read clips from it, but certainly the things that we all know are out there would all have to line up perfectly to even see gold go into a spiral where currencies weren't trusted, and situations like Venezuela where 5 zeros were taken off their currency 2 weeks ago that I mentioned last week on the show, and the fiat currency has been growing at 8% a year, which means it's doubled in 9 years. You know the rule of 72, divide 12% a year into 72, you only take 6 years to double your money. So what they're saying is that the fault of the equities market and the debt market, meaning bonds worldwide, is just really a step away from tumbling, which I agree with. And here's the hardest thing for investors to understand. You always think you can get out of it. You're always going to be smarter. Yeah, you may lose a little bit, but you're not going to lose a lot. You're going to know when to get out. You're dealing with a financial advisor that can help you with that. But what you don't realize is it doesn't work that way unless when people go out, there has to be someone to buy what you're selling. And that's the reason you saw stocks back in 2007 drop 40%, is because everybody wanted out. There wasn't anybody wanting to buy. Every signal showed things were terrible and you wanted out. So until somebody's willing to come in, whether it's 30 or 40% below where the market is when the drop starts, it's not like everybody can get out. The more people get out, the faster the market goes down, the less people buying at bid prices, and they just keep going down. And that's what Sinclair is expecting to happen, as are many people around the world. And this next one, there's over 2.5 times the debt there was in 2007 when the last major problem came. So this problem could be a lot worse as long as the world believes in fiat currency, money by decree, printed out of thin air, anything you want to say about it, until they realize that that's not the answer. It's a temporary place where people are staying in on the merry-go-round. They're going to play Ring Around the Roses, and when the music stops, it's not one person getting off. It's thousands of people, millions of people getting off, and nobody back down there to stop it. You've already seen it happen, and you're going to see it happen again. Now, the flip side of that is what's going to happen to gold. I do think gold will go back to what its function was from the Garden of Eden in the 2nd chapter of Genesis until 1972, when Nixon closed the window, the gold window. So from that time, gold was money. Paper money we carried around was a receipt for real money, which was gold primarily, and in some cases silver. But you're going to see this again because you can't make gold and create out of thin air. So people are going to move to safety, especially when the cracks start like Sinclair is talking about. And once again, I have not heard the interview, but I've had 7 emails about it since yesterday, telling me parts, asking me parts about it. So I think that there are going to be things happen. I think there's major corrections coming in the bond and stock market to the downside, but the stock market may not be through going up yet. I haven't exited the stock market completely. I still have a good part of my portfolio in stocks, but you can put stops in there. Maybe you got a stock at $100 a share And if you put in at 80 or 85, it'll sell off if that big drop starts. So get prepared because something is coming. I can almost assure you. The second thing I want to talk to you about is platinum. This is a metal we've made a lot of money at NNA over the last 42 years. We've timed it very good going in and very good coming out. While I'm not issuing an all-out buy signal today, I'm telling you it is time to look when platinum is around 800, gold is around 1200. So historically, over most of the last 42 years, platinum has been double the price of gold at any given time. And then about 4 years ago, we saw when platinum got up to 2,000 an ounce, it started dropping as car companies were changing their manufacturing capabilities to use palladium. And a lot of them made a lot of money with us in palladium. We saw it go from 180 up to 1,000 an ounce, and now it's back at 900, I think. But what I'm telling you is platinum is 35 to 40 times more rare than gold. All the platinum ever mined in the history of the world could fit in a living room of a large house. I mean, we're talking about hardly any. And while it's not being used for catalytic converters right now like palladium is, palladium's higher than platinum. So what happens if the car industry stays strong worldwide? Palladium's going to keep going up and getting further ahead of platinum. And then platinum, they're going to have companies that are willing to change their manufacturing capabilities to buy platinum because it's going to be several $100s an ounce cheaper. So what I would say to you today is I would start buying platinum and cost average in, even though I have not given an all-out buy signal at this point. Some of my bigger clients have called me wanting to buy platinum because they take other timing services. They buy the metals from me, but they also buy timing services. And timing services will tell them buy platinum. You can buy platinum in 10-ounce bars, 1-ounce bars, my preference, or 1-ounce coins. The problem is the coin premiums are much higher than the coin premiums. They're like 2.5%, 3% more to have a coin. Even though you get more when you sell it, it's still a better deal to buy the 1-ounce platinum COMEX bars that are used in COMEX trading. So I'm happy to talk to you about platinum, or Dan or Kathleen. In our office, you can reach us at 800-247-2812. That's 800-247-2812. And if any of you haven't purchased copper in that incredible deal, we still have some copper coins left. If you did not get the email, call us at that number, 800, and we'll send you the buy signal on those 1-ounce copper coins that look like they have a tremendous amount of potential. And if you're interested in a self-directed precious metals IRA, we can function as your representative and broker, but we cannot function as your custodian. But we can help you get a custodian. So give us a call, talk about any of these things, and also about gold and silver, because the premiums are flying up on gold. They're also moving up on silver, and I just can't imagine silver, much less staying below 15 much longer. It's staying below 16 or 1650. So I'm looking for a very strong move in these metals as we go into the fall. With this week's Precious Metals Market Update, this is Tom Cloud signing out.